Let's join Dr. Azar Jammine now and see if he agrees with the conventional wisdom of most economists saying that my mortgage is going up tomorrow. Azar, is that true?
Yes, it's almost certain that interest rates will indeed rise tomorrow. What is uncertain is whether we're going to see an increase of 0.25% or 0.5%. And that remains extremely uncertain at this stage. My inclination has been for the last few weeks that we'd only see an increase of around 0.25%. But you hear more and more of these stories of how food prices are going to rise as a result of load shedding. And, that might be interpreted as being sufficient to tilt the Reserve Bank into deciding to increase more aggressively by 0.5%.
How difficult is this decision for the MPC? Because when the rates are going up and rising, perhaps it's much easier to make those decisions. But when you're seeing inflation coming down, you have to decide, is it coming down fast enough for us to do something? Do we let it ride? How difficult is this decision to make for the MPC?
I won't say it's particularly difficult because it's a decision that other central bankers around the world are facing right now, especially the US Federal Reserve Board, which has seen inflation in the United States declining from 9.1% down to a current 6.6%, and notwithstanding that, are still increasing interest rates. And the main reason they are saying that they've got to increase interest rates is that the actual rate of interest is still lower than the inflation rate. At the moment, the repo rate is 7% and the inflation rate 7.2%. We know that the inflation rate is going to drop to below 7% in the next month or two, but it'll be it's a very useful excuse that the Reserve Bank can give for why they need to raise interest rates further. In America, it's even more than that. With inflation may have come down to 6.6% from over 9%, but their short-term interest rate is only 4.25%. So they've got quite a way to go upwards. And we are obliged to tend to follow the international trend for fear of money leaving the country if we don't do that, because the one thing that helps sustain capital inflows and deposits into rand assets at the moment is the fact that our interest rates are relatively high compared with most other countries, especially in relation to inflation. And so, at least investors can get a decent return by putting their money into rand deposits right now. If the Reserve Bank doesn't follow the other central banks of the world in raising interest rates, then we will lose that competitive advantage. And the rand could then fall sharply, and then you have a new inflationary pressure emerging.
What are the main drivers for our inflation story?
For our inflation story, without a doubt, food and fuel, those have increased very steeply, as well as indirectly the supply costs of rising input costs emanating from disruptions to supply chains caused by lockdowns over the last 3 years that have led to shortages of a whole host of inputs, and seen the demand for such inputs forcing prices upwards now because people can't get those spares the way they would like to. And one of the most classic examples of this is Eskom itself. That's been President Ramaphosa himself complained that part of the reason why we keep having load shedding and we can't do enough maintenance is that there's a shortage of spares. So in order to get those spares, Eskom would be obliged to pay a hell of a lot more than it might have done a couple of years ago.
So for how long do you think we will see this cycle of hikes? I guess they will become less steep over time, but will they continue for some time?
Well, you're absolutely correct. Even if they go up by 0.5% tomorrow, that would represent a slowdown on the 0.75% increases that we have had in each of the last 3 MPC meetings. So already now we're expecting a slowdown in the rate of increase of interest rates. And the good news is that tomorrow, if they do raise by 0.5%, there's a high likelihood that that'll be the last increase in interest rates for a long, long time. And in fact, many analysts are even suggesting that by the end of the year, if inflation drops to below 5%, as many people are anticipating, the Reserve Bank may then find an opportunity to reduce rather than increase interest rates. So the good news is that we're nearing the end of the rising cycle of interest rates.
All right. And then, just for ordinary citizens like me, what does that then mean if we get to that point where interest rates level off? Does my life improve? Does the economy improve? What happens?
Unfortunately, a lot of the damage has already been inflicted on the economy by the fact that inflation has risen more steeply than most people's wages and incomes have risen. So they have seen their disposable incomes coming under pressure. And then on top of that, those with debt have seen interest rates increasing by 3.5% by the end of tomorrow, maybe even more than that over the last year or so. So life has become tougher. And on top of that, you've got this whole intensified load shedding, which on its own is probably the most damaging source of downward pressure on economic growth in the country. So unfortunately, in the short term, people have to look for very tough times, tougher than at any stage since the lockdown restrictions 3 years ago, 2.5, almost 3 years ago. We had a nice recovery after that as things were loosened up. Now we are paying the price for the loosening up, forcing inflation up, and that means yet another downturn in economic growth. And I think we'll be very fortunate to have any economic growth whatsoever this year.
All right, Azar, I think you mentioned it at the beginning, but just to close off, if you were sitting on the MPC, what would you be voting for and why? What rate?
I would vote for a 0.25% rate increase, because I think there's enough evidence to suggest that inflationary pressures are receding and the economy is under tremendous pressure. Under those circumstances, you really can't see a big surge in inflation developing domestically. And overseas, similar story. The rumors are that the US Federal Reserve Board, instead of increasing rates next week by 0.5%, or 0.75%, which was the expectation a month or so ago, are set to increase by only 0.25% because of fears that if they carry on raising interest rates as steeply as they've been doing, the US economy will be plunged into recession. And same kind of logic locally. So I would go for a 0.25%. And take a chance that you don't need to raise rates beyond that.
Deputy Governor Azar Jammine, we'll leave it there. Thanks very much indeed for joining us. Always good getting your inputs.
Thank you so much.
Thank you. All right, that's the Director, Founder, and Chief Economist of Econometrix ZA, Dr. Azar Jammine, talking to us about the MPC Monetary Policy Committee meeting tomorrow, and conventional wisdom pointing to a 0.5% increase in interest rates. And they like to call it 50 basis points. 0.5% makes more sense to me.